have to ask you about Christine Lagarde yesterday. She sent a very clear message. She said, or repeated many times, the risks to the European economy are very, very much tilted to the downside. The economy is quickly losing momentum, and we don't know what the timeline of the pandemic looks like going forward. By the same token, she also said there is recalibration coming in December. The market is reading this as there is more money coming in December. No question. Is that the right way to read it?
I think this is a correct interpretation with some caveats. The one is, she also said it's very clear that we use the December projections and the information in December to make our decisions. What we've decided is to make preparations, to go through our whole portfolio and see in what area we need to recalibrate to be ready for December, but the decision will be based on December data.
Okay, so you're saying very much back to the data. It's correct to price in to some extent that there is more stimulus coming, but you also point that recalibration means a whole package. So what does it look like to you?
Well, recalibration means that we draw the conclusions for the implementation. We had a discussion about the working of the paper, we had a discussion about other instruments there, and we found out, how to say, that we need to recalibrate based on what we have to expect, which means that, yes, what we all agreed was that PEP was working, it was able to contain market fragmentation, but as regards to the mere quantity of liquidity, there is an emerging consensus that liquidity by itself doesn't do the trick because the prices don't go up. So what we have to look into, what can we do with this structure? We want to have the system more efficient, not simply more quantity, want to have also more structure and as it is needed.
Okay, so you say the PEP is working. Do you want to see more of it? And then what I understand in terms of what you're saying is this is not just about more adding perhaps stimulus, just making sure that what you have already works. Is that the right way to?
Exactly. It is to say we have more than one instrument. We have the paper, we have also the TLTROs which are working, and we have new instruments which may be thought about from here to December, what could be come in. What we see is we have to be a bit more disaggregated in our approach as we had so far, and it's not only the quantity, because as you say, we put a lot of money on the table, but the inflation hardly moved. So there's a rising recognition that quantity by itself doesn't do the trick. You have to look more into the structure and to see how this can be fine-tuned.
Right, and I'm really curious about something you said, new instruments come December. What do you mean by that?
This can be anything, and I won't give you a little hint there,
okay.
But it means that we don't think we are out of ammunition, yes, and we will find out also after the analysis, which is also part of the ongoing strategic discussion and review, what can be used more and what can be used less.
Yes, and what about rates?
Sorry?
What about rates? Interest rates. Is that
interest rates? No. So interest rates. No, interest rates are, to say, will be part of the discussion.
Okay.
But from what I currently see, there is no there's no productivity. There's little effectiveness of an interest rate change. So my sense is, but this is a decision which will be made later on, that it will be moved. But this is something which needs to be discussed. Don't take this as a projection.
Okay. And there's a lot of uncertainty right now in terms of where the European economy goes from here. A few weeks ago, we were talking about this huge rebound that's been called into question because we are going into lockdown. That is a reality. But one of the things that you mentioned is that when you look at the economy, you really want to figure out what a full lockdown looks like, what a partial lockdown would look like. What's the nuance there for you?
I think the critical part is based on the first lockdown, where essentially everything was closed with the exception of the most needed services. I think the current lockdown, at least as I see it envisaged by the different countries, and definitely also of Austria, is to say, yes, we lock down social activities. For this reason, we bring forward the closing of the restaurants, or some countries close them fully, but we want to keep the economic activity, the work in enterprises, in offices, in schools, continuing as it is. So there will be a lockdown, but a lockdown at the social side as far as possible, not on the economic side.
Okay, so the way to read that is perhaps where you're hinting is the economic contraction may not be as bad as some are thinking it could be.
This is the idea, how to say, one found out that the full lockdown doesn't bring the health results You can have them if you are able to interrupt the social interaction. And this will be something which not only, you can do by regulation. This is something that depends very much on personal behavior, and this is the most difficult to control.
Okay, so when the market looks at the European economy and they price in a double-dip recession is almost inevitable, are they wrong?
I think this is, of course, a hope, not a projection, is that the double-dip recession won't happen.
Won't happen.
There will be a weakening, what we see now, but it won't be a recession as steep as we had it, let's say, in the second quarter. This is something all countries try to avoid, and all countries want to stay on activity in order to have a reduction. Yes, we will see the quarter four was already envisaged to be not as strong as the third quarter. Yes, this is likely to weaken given the current one, but it won't be as steep as it is currently envisaged by some.
Right, but you are going to some extent against consensus there by saying, perhaps it's not going to be as bad as it is. A mild lockdown may not be that dramatic for the economy. I wonder, at the Governing Council, is there consensus around this, whether or not double dip is inevitable or not at this point?
No, there was, of course, a discussion how much the recent events will change our main projections, on which the policy is based. And here it was, we are not deviating for the moment too much of the broad projections, which is our basis, but there may be deviations, but we do everything to make sure that it remains at the level what we had envisaged or not too far away from that.
Right, and there's a question I want to ask you very much about the market action that we're seeing today. You are sounding pretty dovish today, and that's not your usual line to have to also pick up on that, where you've talked about perhaps at times before the pandemic to normalize some of that policy. When I hear you right now, you're saying we are going to increase the level of stimulus, the package. I'm not going to give you details on that, but there will be something happening in December. So when you look at the Italian bond market and the yields are jumping today, why is that? What's happening in this market? Is there a disconnect between your message and the way that's being understood, or is this just the concern that there is perhaps a lockdown happening there too?
I wouldn't call 6 basis point a jump. I would say this is something where the market tries to tease out the reaction. I think it's more a price-winning mechanism by the market, and it's unavoidable, that perhaps some have priced in changes now, which didn't happen. And I'm sure, there will be some nervousness on the different market there. But we also still have the instrument of PEP there. The purchases can be varied on a monthly basis, and we'll see how the market will react if those purchases are adjusted in order to reduce this fragmentation of the financial market.
Right, so you reckon that any tension in the periphery is pretty much uncalled for today? There's no need to panic on that front?
I would say this change doesn't signal any kind of market fragmentation.
Right, and no market. That's a good point to make on. And there was an area in which Christine Lagarde also repeated a message many times about the fiscal package and the fiscal stimulus, in which she said, governments need to spend. The ECB will be here for the second wave of coronavirus, but we need to see progress on the national level, and we need to see also that recovery fund happen sooner than later. Are you disappointed by the actions coming out of Brussels? The fact that we seem to be dragging our feet and the ECB is back at the forefront now?
I think both points are well taken. The one is that, yes, the governments need at national level to adjust now in an important, determined but cautious way the fiscal stimulus, because as the lockdown has economic fallouts, there needs to be as much as possible compensated for viable companies. But on the other hand, also, yes, the package is coming, that it is dragging on. I would say everybody who knows the European Union and the Commission for some time knows it doesn't happen from today to tomorrow. But from everything what I heard from the Commission, and we also had Dombrovskis on the call and discussion yesterday, it showed quite clearly that, they are prepared. They are optimistic that they will bring it to the table. They will have it ready by the mid of next year. This was something which has been decided before, and everything on this side, I think, is working. Political last-minute bickering, it's something which is part of the European discussion.